Michelle Makori. This is Kitco News. Thank you for watching. Bitcoin has been a top performing asset so far in 2023, up around 70% year to date. But can this rally continue, especially as Operation Choke Point 2.0 tightens its grip? That's the alleged initiative by the Biden administration to cut crypto off from traditional banking services. Meanwhile, other regulators are also upping the ante, with Binance now in their crosshairs. The U.S. Commodity Futures Trading Commission, or CFTC, is suing the world's biggest crypto exchange, along with its CEO and former top compliance executive, alleging that they were operating an illegal exchange and a sham compliance program. Well, traders have been pulling billions of dollars from Binance as its problems continue to mount, but so far, the Bitcoin rally, for the most part, continues. So what is driving it and what can derail it? Here to help us answer those questions and more, thrilled to welcome back to the show Ron Neuner, co-founder and host of Crypto Banter. Ron, always good to have you back with us.
Michelle, so good to see you. How are you?
I am great, and I know that we are tight on time, so we have a lot of stuff to fly by. And by the way, your new streaming device does make you look younger. You were asking if it was on your previous show. I can confirm that it does. But look, we've got a lot to discuss here, serious stuff indeed. But let's start off with Binance. As we mentioned, the CFTC charging Binance and its founder, CZ, with willful evasion of federal law and operating an illegal digital asset derivatives exchange on March 27th. There are also some other charges, but why don't we start off with you explaining what that's about?
So the CFTC has, as you correctly said, has charged CZ, Binance, the former compliance officer, Samuel Lim, and all their related entities with a whole lot of different charges. But specifically, they're talking about a period around and before 2019. Mm-hmm. Now, you'll appreciate that Binance was a very different business in 2019 than it is today. And, you know, the crypto was a new industry with no real rules and no real rules for compliance, etc. in those days. Now, admittedly, I think that in the early days, Binance, like all the other exchanges, wasn't very compliant. It was a small business which had started in a global industry where there were very few rules and lots of gray areas. And I think in time or over time, Binance strengthened its compliance and its systems and its processes as it became a better business. The CFTC, however, has gone for the period before 2019. And having read the 75-page charge document, it's pretty scary. I mean, you look at it, it's pretty scary. It's knowing that you've got US consumers trading derivatives on your platform and turning a blind eye to it, specifically maybe even hiding data if these allegations are correct. So it doesn't look very good. It doesn't look very good for Binance. But there is one thing that sticks out in this document, and that is that in this document they label Ethereum, USDT, which is the USD stablecoin, and BUSD, which is Binance's US-backed stablecoin. They label all of those as commodities, along with Bitcoin and Litecoin. The SEC, however, has gone after Paxos, which issues the BUSD stablecoin, because it's a security, and they're also angling to call ETH a security. So it seems like, on the one hand, the SEC is calling ETH a security, and on the other hand, the CFTC is calling ETH a commodity. So it could be that one of the reasons why these charges came out now was to try and almost get a territorial battle between the regulators in the United States. Be that as it may, it's not a good look. It's not a good look for crypto. It's not a good look for Binance. But surprisingly, the market's held up pretty strong. I mean, you mentioned that billions of dollars have flowed out of Binance. When I checked last, there was about 1 to 1.5 billion that flowed out of Binance in the last 30 days, out of about 65 billion. That's not a big number. That's quite a small number.
Well, we'll talk about the consequences here. One of them, as you're saying, is that Ethereum, amongst others, labeled commodities, which arguably is bullish for the Ethereum crowd. But before we get into that, this isn't a good look for crypto. And one of the biggest complaints against crypto has been that it facilitates terrorist activities and illegal activities and money laundering and all nefarious activities globally. So this is sort of fueling that idea, because the CFTC also accuses Binance of knowing about and facilitating criminal transactions, citing a February 2019 conversation between former Binance compliance officer Samuel Lim and a colleague about Hamas, the terrorist group's use of the platform. So, I mean, isn't that a potential angle to sort of really crack down on Binance? Because that sort of has been one of the biggest concerns. Well, crypto is being used to facilitate terrorist organizations and to facilitate crime syndicates, so forth and so on. Well, what are the implications there?
Look, no doubt. I mean, just going back to your Hamas example, it was, if you read the quote again, it was...
Ryan, have to interrupt you. Only other person that I know that says Hamas the right way. So well done, you.
So yeah, if you read it, it basically says the conversation is with two people, and the one guy says, so Hamas could use this. And he replies, yes, they would, but they would use small deposits. He doesn't say they did use it. So they didn't willfully know. They said they willfully knew that terrorists could use it, but they didn't willfully know that terrorists did use it. It's not a good look, but again, I have to reiterate, this was a business that was 2 years old, or less than 2 years old at the time. These allegations are from the age of 0 to the age of 2. Now, many businesses, specifically global businesses in industries that are not really well regulated. I mean, here you have the regulation is so gray that the SEC and the CFTC can't make up their mind about who's regulating this. And so at the time, I guess Binance could have done more and probably should have done more. But I think what's important is that they've cleaned it up, and that the regulators haven't gone for them for the period after 2019 at this stage. So what I think happens here is I think Binance pay a penalty and they settle, like all banks pay penalties when they breach. I think penalties between regulatory bodies and banks and financial services businesses are pretty much par for the course. And I think that we've got to see ourselves as a financial service business and say, you know what, you made mistakes, you'll pay the penalty like all other financial institutions would have paid, and we move on. However, when I read the allegations in these documents, a lot of them come across as criminal in nature to me. Like some of them come across as potentially criminal in nature. And to date, the Department of Justice or the Attorney General hasn't gone after Binance in any criminal suits. Right now, it's just a civil suit. Right now, I think everything is okay. But if we do get a criminal suit, then I think the game changes a little bit, because then you got the biggest crypto exchange in the world with between 60 and 90% of the spot trade volume implicated or accused of criminal activity. And I think when that happens, then we're playing on a different field.
Is that likely? I mean, could we actually see the exchange get shut down if criminal charges are filed here?
Well, I don't know if it can be shut down, because remember that they are dealing with an exchange that is very hard to track down where it's domiciled. It is from what I understand in the documents, it is an exchange that has a master license agreement and has local franchise operators, so to speak. And so no one really knows who are you suing? Who's the master license holder? Also, I think this is a case in the United States. And in the United States, Binance has an operation in the United States. But on paper, that's not owned by the mothership, the mother Binance ship, wherever the mothership is actually domiciled. So I think it's a lot more technical. I'm hoping that no criminal proceedings, no criminal charges are laid. But that could take the price of crypto down and could send shockwaves down the crypto ecosystem.
Well, as you say, Binance does operate a separate exchange for US residents that offers a smaller menu of products. So is it likely that the offshore exchange maybe survives, but the US exchange or the US operations get hit here?
I have a feeling that the US operations have been squeaky clean. Remember that they were founded and started running a lot later in the game. And I have a feeling that you can mess with regulators in the Seychelles and Mauritius and those kind of jurisdictions. I have a feeling that you don't want to mess with the regulators in the United States. And I suspect that Binance US was actually run the right way.
All right. So far, though, it doesn't seem like this has really impacted sentiment at large for the crypto market, right? I mean, are you surprised by that?
Yes, unless we get into criminal proceedings. But also, one thing that you should consider, if you think that the biggest centralized exchange in the world is going to go down, and you've got money on the biggest centralized exchange in the world, and your money is denominated in either US dollars or whatever currency, what are the two options that you have with your money? The first option is you can withdraw your money to your bank account. And the second option is you can buy Bitcoin and you can just get off the exchange and hold your Bitcoin yourself, right? And so I think that some of the buying pressure on Bitcoin is actually people saying, hold on, maybe something is going to go down with Binance, maybe not. And just in case it does, I want to be in Bitcoin. We saw the same thing happen when the USDC stablecoin depegged on the weekend, where Silicon Valley Bank collapsed. And we found out that the issuer of the USDC stablecoin had $3 billion in Silicon Valley Bank. And when people started to worry about the stability of the stablecoin, they ran into Bitcoin, which actually started this pump. Bitcoin was trading at $20,000 when that happened. And Bitcoin went to $28,000. Now, what was that? That was people saying, hold on a second. I don't want to be in this USDC stablecoin because I don't know how much exposure they got to the collapsing banks. And so what they did was they fled from the stablecoin or the riskier coin to Bitcoin, which at least they knew was safe.
All right. So that you're saying, ironically, actually is playing in Bitcoin's favor. But as we mentioned, Bitcoin doing very well so far year to date, still hasn't broken past that 30,000 mark, but is rallying. Help us understand what is behind this Bitcoin rally, considering the context that we also happen to be in the middle of a traditional banking crisis. So how much of this is that Bitcoin is seen as fulfilling its mission, as being an alternative against traditional finance? What are some of the major factors driving the Bitcoin rally right now?
So Bitcoin fundamentally, and I'll try and show it to you here on the chart, is if you look at this chart over here, Bitcoin price just follows global liquidity. Look, Bitcoin is a function of global liquidity. It's the biggest custodian, so to speak, of global liquidity. And what we're seeing as a result of this banking crisis is potentially and more money coming into the economy. In fact, it's not only in the US, it's actually also globally. So I pulled up this chart for you over here, which you can see. The red is the US liquidity, and the chart is the total global liquidity. Now, what you'll notice here is that since the bank started to collapse, there's just more liquidity. Now, where is the liquidity coming from? There's more liquidity in the States in response to these to the banking collapse. There's more liquidity in China because China is starting to stimulate its economy again and putting a lot of money in the market. You got the Bank of Japan trying to defend the yen, putting a lot of liquidity into the market. And so we're in an increasing liquidity environment, ironically. Even though the Fed is on about reducing inflation and tightening financial policy, actually, if you look at the stats, if you look at the charts are showing you that the global liquidity is increasing. And Bitcoin is a volatile asset, and it is increasing for two reasons. The first reason it's increasing is because it's a beneficiary of liquidity. And the second reason is because the reasons for the instability in the market, the banking collapse, the China-Russia trade deals, which are now being conducted in yuan as opposed to US dollars, that are being settled, this is all causing people to flee into safe havens. So as we speak, I mean, I was watching gold just before we started. Gold hit $2,000. It's now back at $1,980 or very close to $2,000. And so I think Bitcoin is now being seen more as a digital gold than a technology play. And I say that if you had followed Bitcoin in the last 12 months, it had a very good or very close correlation to gold or to the traditional, to the NASDAQ and to the traditional technology markets. But if you look at it now, it's actually starting to have a higher correlation towards gold. And so I think that Bitcoin has this amazing ability to be a technology in terms of the fact that it's a technology and the fact that it's gaining adoption like a technological product. But in terms of its fundamental qualities, people are starting to appreciate that it may actually be an improvement to gold because it's scarce, really scarce, because it's easy to transport. You can easily subdivide it. And so I think that it's the adoption cycle of Bitcoin as a digital gold and an alternative store of value.
All right. Well, one of the reasons that we're seeing gold rally, well, there's several reasons, but one of them has been what you kind of touched on, and that is this trend towards de-dollarization. That's a big macro trend at the moment. And we're seeing it accelerate, led by the BRICS, Brazil, Russia, India, China, and South Africa. They're continuing to move away from the greenback. Just recently, China and Brazil have reached a deal to trade in their own currencies, ditching the US dollar as an intermediary. China and France just completed their first liquefied natural gas deal, settled entirely in yuan. We know that China's President Xi Jinping met with Russia's President Putin last week, both vowing to significantly increase international trade in yuan instead of dollars. A big push away from the dollar. And there's also speculation there that we have the BRICS working on their own reserve currency, which will be backed by commodities, including gold. And so we've had central banks buying gold at record highs. That's been one of the big factors behind gold, as well as, of course, a traditional play against inflation and a safe haven. How do you see Bitcoin playing into this de-dollarization discussion, which, as I say, is accelerating really, really rapidly?
So I believe we started that narrative, or we started covering that narrative on our station about a week ago, and we've done a couple of shows this week about it. The one thing that you'll notice if you look at the chart that I've put up is this is the GDP of the G7 versus the BRICS countries. So the brown line over here is the BRICS countries, and the darker line is the G7. And what you can see is if you look at GDP of the G7 versus BRICS is on the increase, whereas the G7 are very much on the decrease. And this is since early 1990s. That's the trend. Now the BRICS countries are proactively trying to move off the dollar. I would say, the last couple of months it's come to a head that they are proactively trying to move off the dollar and looking for a different currency. A lot of the trade is being done in yuan. I think that the trend of de-dollarization is a real trend. I don't think it's something that's going to happen really quickly or this year. It's a trend that's been a multi-year trend. And in fact, I think in the last 20 years, it's gone, the dollar's gone down from a reserve currency from, say, 70% to about 59% of the global reserve currency status. But I do think it's something to pay attention to. And I do think that the war in Russia exacerbated it, specifically because Russia and China have very close relationships. Russia does need trade partners, and it's simply strengthening the yuan as an alternative currency. Now, is the yuan a good alternative currency a better alternative currency to the dollar? I mean, I think both have their evils, so to speak. The US has huge debt. I think the US has been its own worst enemy in the way that it's conducted its foreign policy. But I mean, it's not to say that China is any better. I think it's just two of a bad bunch. I think Bitcoin is the custodian of some of that because people are saying, hold on a second, Bitcoin is actually a neutral currency. It's a digital store of value. And maybe we think that at some stage, some central banks will actually start turning to buying Bitcoin as like they buy gold to back their currencies. So I think Bitcoin is a custodian of that. Obviously not to the same extent as gold, because remember, gold is much more established.
Sure.
But you got to remember that most countries moved off the gold standard. And it kind of feels weird that now, so many years later, we're going to start moving back towards, well, we've got to have gold reserves.
It may feel weird, Ron, but we have seen central banks making record purchases in 2022, buying more gold than they have. And again, there is a speculation that you're going to have this BRICS currency, a digital currency, not pegged to gold, but backed by gold and potentially other commodities. And it's also interesting to note that Saudi Arabia and Iran, which have recently resumed diplomatic ties thanks to a deal brokered by China, are also very interested in joining the BRICS party, which would further accelerate that GDP chart that you showed us there in terms of outpacing the West. Okay, so Bitcoin potentially also benefiting from that. Another factor here is the halving cycle. Is that playing into this?
That's the macro cycle. And, I don't like the halving cycle because I have a very short attention span and I like things to happen quickly, as you know. And when you tell me that a cycle happens every 4 years, it's kind of demotivating. It's like, wow, we have to wait 4 years to get the cycle high and the cycle low. But the truth is that as much as I hate that narrative, I have to believe that it's the most accurate indicator of when we are going to get rallies. So on the screen here is a chart of all the Bitcoin price since its inception, more or less, and the halving. And now you can see that usually when you get to about 60% towards the halving, you start a bull run. It's happened in the last two halvings, and it's almost like we're now 72% of the way through the halving. And traditionally, every time that's happened, we've gone higher. And I looked at it again on this one. Here's another illustration of the halving cycles, and you can see that we're following them really. I mean, it looks like a mirror image or a copy of it. So as much as I hate the theory about the halving cycle, it is the one theory which is a massive macro. Like it's the macro for Bitcoin. When you reduce the supply of an asset and the asset has the same adoption, I guess that the price has to follow the same trend.
Okay. So I know we're running out of time. Anything else that you think has been critical in creating this positive sentiment in Bitcoin this year?
So I think we've covered the positive sentiment for Bitcoin.
All right, let's do the flip then. Let's talk about the threats then.
Yeah, there are one or two risks on the horizon. You mentioned rightly Operation Choke Point, which, for those of you who don't know what that means, it is what we believe is a coordinated effort by the Biden administration to choke the amount of money that can enter crypto. So by not allowing money to come from the traditional financial system onto the crypto ecosystem, effectively you create a loss in liquidity, and therefore the price just doesn't move, and hopefully people lose interest. That's how we believe they're playing this. Now, there's been a coordinated attack from the SEC, from the CFTC. We also saw the majority of the crypto banks get shut down in the span of a week. We had Silvergate Bank go under. We then had Silicon Valley Bank, which was a really friendly crypto bank, go under. And then we had, under mysterious circumstances, Signature Bank, which was almost forced to go under. And there's a lot of controversy because apparently that bank was perfectly solvent and there was no reason for it to close down. At the same time, in the buyout procedure, there were rumors that the new buyer would have to dispose or shut down the crypto business completely. And so one of the risks here is that, they intensify Operation Choke Point, and they suck out the US liquidity into crypto, or they stop the flow of US funds into crypto. I think it would be suicide, because we've got, I think the stat is that one in four Americans has owned crypto or something like that. It's a big number. And I think that it's a voter issue for a lot of Americans. You also have the SEC going crazy, trying to regulate everything. Crazy. We haven't seen them like this. We had FTX collapse, which was one of the biggest financial collapses in the world, let alone in crypto. And the SEC was nowhere to be found. And since then, they seem to be going after everyone and everything. So we've got Gary Gensler running around like a crazy person, like a mad person, going after everyone. That's one of the risks. One of the risks is that they tighten the regulatory regime beyond reasonability. Now, right. We're all good for reasonable regulation. And to be honest, I think up until now, the regulation's been a little bit lax on crypto. But I think that now they may be overreacting, which is what Americans do really, really well. Americans don't respond until something goes wrong. And when something goes wrong, they have a great habit of overreacting and over-enforcing. We see that today. The other risk is in 2014, there was an exchange called Mt. Gox, which was hacked.
Right.
And as a result of the hack, it went insolvent. The liquidator it's been the Bitcoin in Mt. Gox have been tied up in a liquidation process since 2014. But now the liquidator is set to start distributing Mt. Gox Bitcoins sometime in March and until September. Now, how big are the Mt. Gox Bitcoins? It's about 140,000 Bitcoin. So you do the maths, 140,000 Bitcoin, about $3 billion, about to hit the market between now and September. So it is a big number. I'm looking at 137,890 Bitcoin, and as they have been for a while, and those could potentially hit the markets. That could bring a little bit of supply onto the market, which, maybe won't be absorbed as quickly as we hope. Specifically, right. If you combine Operation Choke Point with no money being able to come onto the ecosystem with an oversupply, you get quite a bad effect.
All right. So Ron, given all of this, and I know we're tight on time here, we've also got the Fed looking like it may pivot. That is the growing speculation that there's perhaps one more rate hike and then expectations for a pivot. What is your outlook, given all these pros, given all these cons, for Bitcoin over the next 3 months and then longer? But let's start off with 3 months, because I know you and Gareth Soloway disagree on this one.
We disagree. Gareth says down. I think up. I think the Fed has no choice but to start loosening. You are getting the signs of a banking collapse. The reason why Silicon Valley Bank collapsed, we are now seeing is the same reason why many other banks could collapse. And I think that as much as the Fed would like to tighten, and as much as Jerome Powell kept a very strong demeanor in his last conference, the market didn't believe what he said. He said that on the dot plot, there would be no rate drops this year. But if you look at the Fed expectations, at the expectations of the market's expecting 3 rate cuts this year. So I think as much as the Fed wants to convince us that they are going to remain in a tightening cycle, I think we're inevitably going to go into a loosening cycle. Loosening cycle means more liquidity. More liquidity equals good for Bitcoin. And so I think if we look at Bitcoin, I don't want to make short-term predictions, but let's say 3 to 6 months, I think definitely the number's higher than 28,000 where we are today.
Well, come on, Ron. That's not really that much of an acceleration. I know that some people like Gareth expect a major dip down from 28,000, but is that your high? I mean, assuming this rally breaks past that 30,000.
Oh, no. I think the high is depending how far you want to look at it. But I mean, I'm not going to give a high.
Let's assume the Fed pivots and cuts rates. What does Bitcoin do?
You see, I don't know if liquidity is something that changes in 3 months. But if you tell me between now and the end of the year, I definitely see Bitcoin going above 50,000 this year. If everything stays as it is, set par, I think that we definitely see a Bitcoin around 50,000 later on this year. Is it going to happen in the next 3 months? It's very hard to understand how much liquidity will flow into the market in the next 3 months. So very difficult to call. But definitely I'm a bull this time around.
All right. Well, Ron, because you mentioned gold and Bitcoin, the expectations are for gold to reach a new all-time high this year, but you're saying you're not seeing Bitcoin reaching a new all-time high this year.
I think too soon. I definitely think before during the next halving cycle. So if you follow the halving cycle that I showed you, I do think that as we progress into the halving, we will see the new highs, but we're talking about that's a year away, a year and a bit away.
All right. We'll have to be patient for that. Thank you for your time, your patience. I know you have a flight to catch. Ron, always great to see you. We'll see you again very soon. Thank you so much as always.
Thanks, Michelle. Nice to see you.
Nice to see you. Safe travels. Thank you as always for watching. And to keep it right here, I'm Michelle Makori. If you are watching us on YouTube, make sure to subscribe. We'll see you soon.